Something shocking is happening in Texas right now. The housing market that once looked unstoppable is finally cracking. Cities that were booming just a year ago are now seeing homes sit empty, prices slashed, and sellers desperate. From Austin's luxury suburbs to Dallas's outer neighborhoods, the collapse is spreading faster than anyone expected. And trust me, number one on this list will leave you speechless. So don't blink, because by the end of this video, you'll know exactly which Texas cities are falling hardest and whether your city is next. Number 10, Dallas. Dallas area housing is showing cracks. The Texas Real Estate Research Center reports that in March 2025, the home price index for Dallas showed a very slight year-over-year change, essentially flat or slightly negative. Why? First, inventory is rising sharply. More homes listed than in past years. Second, migration momentum is slowing. Fewer new buyers moving in than during the pandemic boom. Finally, mortgage rates remain elevated, so affordability is under pressure. What it means, buyers may now have negotiating leverage in DFW. For sellers, the days of list-high multiple offers are fading. Investors need caution. Holding costs plus slower demand equals risk. Number 9, Austin. Austin was among the fastest-growing large metros in the U.S., but it's also among the first to show a meaningful price dip. In March 2025, it had roughly a 2% year-over-year decline in median home prices. Key triggers. Rapid new home construction has ramped up, pushing supply. Migration from outside has slowed, and many buyers paid premium prices in 2021 to 22 and are now seeing much less upside. Implication. If you're buying in Austin now, you're entering a buyer-friendly market, but also one with more downside risk. Sellers who bought at the top may face losses if they move now. Number 8, San Antonio. San Antonio shows more volatility than some larger metros. March 2025 data. Home price index up 2.1% year-over-year, but that masks huge inventory rises and localized weakness. Why the risk? While the headline plus 2% seems fine, the structure is changing. New listings are up, price reductions are more frequent. Statewide median price reduction was $12,500 in March 2025. What to watch? In San Antonio and submarkets, homes listed in 2021 to 22 at high prices may now attract fewer buyers, so discounting is more likely. For investors, the kind of flip quickly for profit mindset may be less reliable. Number 7, Houston. Houston still shows modest price appreciation, 2.4% YOY in March 2025. But that doesn't mean it's immune from collapse risk. Here's why. Active listings in the Houston area jumped 36.6% year-over-year. New home construction permit activity is dropping in major metros, including Houston. So while Houston holds up better than some, the rising supply plus slower demand dynamic means this market could soften further if key support conditions weaken. For buyers, still possible value. For sellers, less cushion than in boom years. Number 6, McAllen. Here's a more surprising case. McAllen, Texas, once a fastest-growing affordable market, is now showing buyer interest decline and rising unemployment. Details. In spring 2025, median list price was $274,950, but that followed years of strong growth, and home search traffic among local buyers shifted outward. The unemployment rate rose to 6% in May 2025. Number 5, Midland. This oil and energy-driven region has seen strong job/wage growth, but that brings risk too. According to the Milken Institute's 2025 index, smaller Texas metros like Midland improved due to job gains. But as housing becomes more expensive in such boom areas, affordability breaks down. If energy prices soften or job growth stalls, home prices can drop quickly because the market is heavily leveraged to one sector. Number 4, Fulshire. While not a metro name everyone knows, Fulshire and similar suburban zones near big Texas metros illustrate the risk of rapid expansion followed by correction. For example, towns near major job centers grew hugely, Fulshire 26.9% population jump, then faced slowing growth. For viewers, if you invested in one of these outer suburbs, you might face longer time on market, bigger discounts, and less upside. Number 3, Pampa. Panhandle wind whips through empty streets. Zillow Q3 2025. Median home $154,000. down 5.2% year-over-year. Oil below $70 a barrel gutted drilling. Texas Real Estate Research Center. Listings up 18%. Homes sit 72 days, double the national average. Population outmigration 2.1%. Young families flee to Amarillo. Number 2, Temple. Central Texas markets, not always headline grabs, are showing early signs of correction. For example, overall Texas active listings hit 132,140 in March 2025, up 29.7% YOY. In the Killeen-Bryan College Station corridor, the growth from military/education jobs brought buyers, but with higher mortgage rates and elevated asking prices. Number 1, Pearland. Pearland, a well-known Houston suburb, experienced dramatic growth earlier, but now shows signs of slowdown in residential building and demand. For example, new home starts dropped from 1,394 in 2015 to just 156 in 2024. What this signals? When new starts plunge despite growth, it implies the market is already absorbing the existing supply. Combined with elevated inventory statewide, this puts downward pressure on price growth or even triggers modest declines. As we've walked through these 10 Texas cities, from Austin to Pearland to McAllen and beyond, a clear pattern emerges. Exponential growth during the pandemic era met a sobering reality in 2025. Markets that skyrocketed are now confronting oversupply, slowing migration, affordability ceilings, and buyer hesitance. Thanks for watching. Until next time, stay smart, stay informed, and if you're investing in housing, don't just bet on location, bet on timing and fundamentals.